Welcome back to the channel, everyone, where we break down the latest moves in the Cardano crypto market, key levels, and the trends you need to watch so you can stay ahead of the game and make smarter decisions. And today, we've got a very exciting update because I think we can all agree this has been one of the most action-packed 24 hours we've seen in a while. The market has been full of whiplash recently, but this time things flipped in a way that caught a lot of short sellers and bears completely off guard, leading to one of the biggest short squeezes we've seen in recent weeks. And we're going to break all of that down in detail, along with some very important overnight developments that could shape what happens next. But before we dive deeper, quick disclaimer. This video is for educational and informational purposes only. This is not financial advice. Always do your own research before making any investment decisions. The crypto market is highly volatile and risky. Past performance does not guarantee future results, and I am not responsible for any financial decisions you make based on this content. Now, with that out of the way, let's get straight into it. Because the big question right now is, are we finally out of the woods, and can things actually start getting better from here? So starting with Cardano right now, we are in a completely different price zone compared to where we were just yesterday. Earlier, we were talking about the possibility of the market sweeping Sunday lows and potentially breaking down further. There was real fear in the market, especially with geopolitical tensions rising and the deadline situation that could have escalated into something much worse. But instead of downside chaos, what we actually got was the exact opposite. We got a ceasefire development that instantly changed market sentiment and triggered a massive upside reaction. And if you look at ADA from the lows of yesterday, it surged over 10%, almost touching that 11% move in a very short period of time, which is extremely significant because these types of moves don't just happen randomly. They are usually driven by aggressive short covering, and that's exactly what we saw across the entire crypto market. Even Bitcoin, which had been struggling and testing lower structure earlier in the day, made a powerful move from around the 67K region all the way back up to the 72K range, reclaiming key levels and showing strong momentum. And right now, the focus shifts to whether the market can actually hold these gains, because holding gains after a squeeze is just as important as the move itself. Now let's talk about the major catalyst behind all of this, because this is where things get really interesting. The big news that drove this rally was the announcement that the United States would be suspending attacks on Iran for a period of 2 weeks under certain conditions, including the reopening of a key strategic route. And what makes this even more important is that Iran reportedly accepted this 2-week ceasefire proposal, which is a major development because for weeks there had been conflicting reports, rumors, and uncertainty around negotiations with both sides, sending mixed signals. And as we know, social media can sometimes amplify misinformation, making it difficult to understand what's actually happening. But this time, we finally got a clear public acknowledgement of an agreement from both sides, and that is a huge deal for global markets, because uncertainty is one of the biggest drivers of volatility. And the moment that uncertainty starts to ease, even slightly, markets tend to react very aggressively to the upside. We saw oil prices drop sharply following this news, which indicates reduced fear of supply disruption. And at the same time, the overall sentiment in financial markets improved significantly, with the Fear and Greed Index moving back toward neutral territory after spending a considerable amount of time in fear. And this shift in sentiment is something that can support further upside if it continues. However, it's also important to stay realistic because not all ceasefires lead to long-term peace. History has shown us that these agreements can sometimes be temporary, and there is still the possibility of further escalations, especially involving other countries in the region. So while this is definitely a positive development in the short term, it doesn't completely eliminate risk from the market. Now, in addition to the geopolitical news, we also saw a massive short squeeze event where approximately $431 million worth of short positions were liquidated in a single day, making it one of the largest squeeze events since early March. And this is important because when shorts get too comfortable in a downtrend, the market often punishes them with sudden upside moves, forcing them to buy back positions, which accelerates the rally even further. And that's exactly what played out here. Now looking ahead, we also have some macro and policy developments that could impact the market, including discussions around stablecoins and regulatory frameworks. There are reports suggesting that certain policy changes related to stablecoin yields could slightly boost lending activity, though the impact appears to be minimal at around 0.02%, according to sources like Bloomberg. And we are also getting closer to potential progress on broader crypto regulation, which could bring more clarity to the space. And regulatory clarity is something the market has been waiting for because it can attract more institutional participation over time. Now coming back to the current market structure, after such a strong move, it is completely normal to see some overnight selling and profit taking. We've seen this pattern play out multiple times where after a big rally, traders lock in gains, especially during lower liquidity hours. So this pullback is not necessarily a bearish signal on its own. What really matters now is whether the U.S. trading session can bring stability and continuation, because if stocks continue to rally alongside crypto, that could provide additional support for further upside. And speaking of stocks, we did see major indices like the S&P 500 and NASDAQ close in positive territory, which adds to the overall bullish tone. And technically speaking, many short-term indicators like RSI and stochastic RSI have cooled off slightly after the move, which actually opens the door for continuation because it reduces the chances of immediate overbought conditions. So overall, the setup right now is much healthier than it was just a day ago. But again, we need confirmation through sustained price action and volume. So to sum it all up, what we're seeing right now is a market that has reacted very positively to a reduction in geopolitical risk, combined with a powerful short squeeze that caught bears off guard. Cardano has shown strong relative performance with a double-digit move from the lows. And if this momentum continues, it could signal a shift in short-term trend. But at the same time, traders need to remain cautious because the situation is still evolving and any negative headlines could quickly reverse sentiment. So this is definitely a moment to stay alert, manage risk properly, and avoid getting too emotional with trades. And if you found this breakdown helpful, make sure you hit that like button and subscribe to the channel for more updates just like this, because we're covering these moves in real time and helping you stay ahead of the market. Thanks for watching, and I'll see you in the next one.